What's up, guys? Welcome to the Momentum Trading Lab. I'm your host Renier. Please consider hitting that like and subscribe, and let's get into it. Okay, so before I get into the chart, let's quickly open Forex Factory and just quickly see what we can expect for the rest of the week. So obviously today we had the banking holiday in America. So the futures market only traded up until the New York lunchtime. So nothing for today. If we go to tomorrow, we have a medium impact event at 10 o'clock. So that is the same time as when the silver bullet starts. So hopefully that can give us a bit of an injection of liquidity at around 10 a.m. So definitely watch out for that. So normally at around 10 a.m. they'll spike it into a liquidity pool, and then we'll get the market structure shift with the displacement on the lower term time frames. So I normally look at the 5 minute, the 3 minute, the 2 minute and the 1 minute to find those imbalances, and then I enter in that imbalance, stop loss at the high or the low, and then you just ride it to the first opposing liquidity pool. Then on Wednesday we have some medium impact news right at 8:30. So normally when there's a bit of news at 8:30 you get a nice little move, and then just after the open we have more final service PMI, and then at 10 a.m. we have a high impact news, the ISM. So more liquidity injection at around the silver bullet, so watch out for that first liquidity grab, and then wait for the market structure shift with the displacement. So that is on Wednesday. Thursday, unemployment claims at 8:30. Normally when we have the unemployment claims and anything FOMC, then I try to get my trade in during the London session, and then I also look at the PM session, and then I try and skip the AM session when we have all of this craziness going on. So that's Thursday. And then on Friday, not much, just the FOMC member speaking at 9, and then again at 10 a.m. when the silver bullet starts we have medium impact news. So that's just a recap of what we can expect for the rest of the week. Alright, so yesterday I went through the Dixie, so this is basically the same chart as during yesterday's stream. So let's remove all of this and just look at it from a fresh perspective, and let's start with the weekly. So looking at the weekly chart, just get a trend line. We had these relative equal lows, so the sell side liquidity would have resided below these lows. Then they tapped into it and then got a pretty strong move out of this liquidity. So the larger players, they absorbed all of these stop losses for people that were still long, and now obviously they need to pair these long positions with buy side liquidity. So to me it seems likely that the dollar will continue to gravitate towards these highs. So let's mark that off. So the first high is at 104.699. So that's going to be our buy side liquidity on the weekly. To the right, and let's make that white. Now copy this line. We also want to see this high at 105.883. Not any. Let's just see if there's any imbalances. We have this one right here on the weekly. And then nothing really over there. There's a little one there. They tapped into it and then moved straight back up. Little one right there. Just tapped into it and then moved back to the upside. They're gonna move that like that. Okay, so We also had a high right there, so technically this is a high. We have a lower high on either side of the candles, so this has been taken. So we could potentially, over the coming weeks, gonna switch off the extensions for now. So in the coming weeks, we could potentially expect a move back into the discount range. And then seeing that we have this fair value gap right here in alignment with the Fibonacci 618. I'm gonna switch off this one as well. So seeing that we have this fair value gap and the Fibonacci 618 right there, seems likely that we could gravitate towards this area and then continuing back to the upside towards these highs. So that is something that we could expect. But I think the daily still has some business that it needs to take care of. And that business is to the upside, but we'll have a look at that in a moment. Okay, so that's kind of the price action analysis for now on the dollar index. We also have this imbalance right here. Already tapped into it and then got this move to the downside. So I'm just going to mark it here so we can keep this in mind. Fair value gap low on the weekly. Just going to give this a different color. And then we are going to change this to high. Okay, I think that is pretty good for the weekly chart. Let's have a look at the momentum master B. Okay, so this kind of aligns with this idea, a retrace into back into discount into this imbalance towards the Fibonacci 618. Stochastics RSI looks like it is about to flip bearish on the next candle print. RSI is pointing to the downside. Williams is overbought, printing the red signal as well. So that is definitely in alignment with this idea that we have right here. Okay, I think that's it for the weekly chart. Let's move down to the daily. Okay, gonna make this a little smaller. Okay, so here we have those lows that we identified on the weekly chart. Came into it, came straight back out. Alright, so this is kind of my thinking, so I'm just gonna remove that. Alright, so we had this nice run up to the upside, and then the dollar index printed this low, right? So we have higher lows on either side of this candle. So let's just quickly put a trend line right there. So that tapped right into the sell side liquidity. Let's just make it SSL. Seeing that there is not a lot of space. So we broke this low, but we did not displace below this low. So this just tells me that this was a liquidity raid of any potential stop losses below this low. So what that then tells me is that they want to at least pair their orders that they filled right here by knocking everybody out that were at their stops right here. They need to now pair those orders with the liquidity that we have right here, because we have these relative equal highs. So traders will see that as resistance. And if they go short, they will potentially put their buy stops in this area. And then also we have this high right here. So to me, it tells me that the larger players want to see the dollar move into these areas so they can take profit on their trades that they opened in this area when they knocked everybody out that had their stops for their long positions in this area. So that's why I think the dollar still needs to go and do its business to the upside before the weekly will then start to play out this idea. Okay, so we had a nice move up, tapped into the liquidity, created some displacement, so we have this fair value gap right here. Right, so at this stage I'm not sure if it's on the next daily candle or two, if it's going to go and take out these highs. It might retrace to reprice this imbalance. So let's get a fib on this. So it might retrace from here back into a discount, but to me it seems more likely it will first go and take out the high, then retrace back into a discount, reprice this imbalance, and then continue its way to the upside. Okay, so Momentum Master B, also kind of in alignment with this idea. The Williams, our strength indicator, is still pointing to the upside, and the stochastics is also pointing to the upside, and then the MACD has not flipped bearish yet. So 3 bullish signals on the Momentum Master B, also in alignment with the idea that we just discussed based on just the price action. Alrighty, that's the daily chart. So just before I move on, just for completeness sake, let's just identify the liquidity below the sell side liquidity. So right here we have relative equal lows. So we know below relative equal lows is sell side liquidity or sell stops. Equal lows. That to the bottom, center. Okay, equal lows. Let's mark that off as, let's just copy this line. Okay, so this is our sell side. On the daily chart, so this level is at 101.784, and then we also have to look at this low. And then obviously also that low right there. Right, so here we have the internal range, sell side liquidity. This will be our external range right there. For now, I'm just going to mark off the internal range liquidity for the sell side. So just to recap the daily chart, we could potentially see it just move down, reprice this area, then move to the upside to take out the buy side liquidity, and then potentially the sell side liquidity below. But seeing that we took out all these orders, and after that we've only taken out the liquidity above these highs, to me it seems likely they will push price to the upside to take profit on their long positions that they opened up in this area. Have a quick look at the 4-hour chart. On the 4-hour, not really much. Bearish market structure. Now it flipped into bullish market structure with displacement right there, so a couple of bullish signals. Looks like the 4-hour wants to retrace a little bit, and that's also in alignment with the idea that we had right here of the daily having to reprice this imbalance. Okay, now the 1 hour is just kind of moving sideways, reprice that imbalance right there. Stochastics wants to push to the upside, and the Williams is also resetting with a bullish divergence. We'll have to see how that plays out. Alright, so I think that is my analysis for the dollar index. Have a quick look at the Nasdaq. Okay, so this is basically the same chart from yesterday. Don't know why that is there. So yesterday we discussed the idea of the daily flipping into a bullish market structure. Took out the sell stops below this low. Also came into this volume imbalance right almost to the midpoint. Then started to push away. Bullish market structure, displacement, fair value gap. So to me, the daily chart conveys that the draw on liquidity will be to the downside. So we can see these small doji candles starting to print, kind of starting to lose momentum. Seems likely that it's going to retrace into this area. The bottom of the fair value gap is more or less in alignment with the 618. So I think we can kind of expect a retrace back into discount before we move back to the upside to take out the buy side liquidity right there, and then to go and reprice the volume imbalance that we have right here. Right, so basically same story from yesterday. And then yesterday I also said that we had this bearish order flow, and I said that we could expect these highs to be taken out, potential move back into this old fair value gap, and then get the move to the downside. And that's basically more or less what happened. We started to move to the upside into the fair value gap. Then at the open today, they just basically raided the liquidity right here, and then we got that move to the downside. So for when the futures market opens at 6 p.m. I think, we have to be aware of these imbalances right here. This one is right almost at the equilibrium. Because I still think that the draw on liquidity is going to be towards, at least towards these relative equal lows right here. So for my trades tomorrow, definitely still gonna go hard on the shorts, with the draw of liquidity being towards these highs. If you go back to the 15. Alright, so nice bearish order flow right there. Let's get a Fibonacci on this. Alright, so what I am expecting is a potential move back towards these imbalances. It can either be towards this one or that one. So once we get there, that is when you move to the lower term time frames. For instance, the 5 minute, 3 minute, 2 minute, or 1 minute. So once we get into these areas, then on these lower term time frames, I want to see a liquidity rate on these lower term time frames, market structure shift with displacement, and in that displacement leg we want to see a fair value gap. So ideally that fair value gap is going to form on one of these three time frames, the 1 minute, 2 minute, or 3 minute, and then you enter in that fair value gap with your stop. Just your stop will basically be right almost at this area, but just look at the previous high that it's going to print. Your stop will be right there. And then, like I mentioned, draw on liquidity is going to be towards these lows. So just more or less this is at around 15,458. So let's quickly put a path tool on this. So once we get into this area, we are going to be looking for that market structure shift, retrace into the fair value gap, and then run it towards that liquidity right there. Something like this. So this could potentially either happen in this area or in that area right there. So I'm going to quickly switch on the extensions as well. Okay, so one standard deviation of this move will take you right to these lows. So I think this is a solid setup starting to form right here. And I will post this chart in the Discord. Let me maybe do it right now before I forget. Okay, I won't forget. I'm gonna make a note. I'll do it right after the stream. I'm gonna put it in my notes. Okay, right after the stream, I will post it in the Discord. If you're not in the Discord, definitely grab the link in the description, and you will find my charts right here. And then also definitely have a look at Illuminated. He's also posting Nasdaq and Bitcoin analysis in this channel. Alrighty. Okay, that's my Nasdaq analysis. ES is gonna basically be more or less doing the same thing. I'll do full analysis on ES tomorrow again, but seeing that it's holiday, I'm gonna have a look at some crypto as well, Bitcoin and 2 altcoins that I have. So I think that is basically a good time to start doing that right now. Let's have a look at the Bitcoin chart. Alrighty, so let's have a little review of what happened right here. So we had this consolidation, then that pump right into this imbalance, and then this is kind of more or less kind of the ICT 2022 model. Let me explain. So basically the ICT 2022 model on the 4-hour chart. So we had a high right there, and we had a premium PD array fair value gap right here. So it came into it. Then we printed this low. So here we have a low, and then this was your bearish market structure shift. So at that point, you will be looking for a fair value gap to enter on. That fair value gap was right here, small, but it's there. And came right at the equilibrium and then dumped straight to the opposing liquidity. So that's basically more or less the ICT 2022 model as I understand it. Alright, so let's have a closer look. Okay, so have a look. We have these lows right here. So we can assume a lot of people is going to see this as support, strong support, right? So if they go long, their stops will be somewhere in this area, right? So I am expecting a move to go and knock out these stop losses, but we have these equal highs right here, and then we have this untouched imbalance right here. So I'm thinking they push it up, take out the buy side liquidity above these highs, take it right towards the equilibrium, and then push it down towards the sell side liquidity. And this is more or less at around 25,300. This low is at 25,175. But then we also have to consider that they might push it all the way up here to reprice this imbalance. And I think that is more or less around the Fibonacci 786. Also looks like we have the OTE right there. So we could potentially see something like this. So once we get to these levels, that is when you can, for instance, for Bitcoin, because it has a lot less liquidity than the futures market, I will go to the 15-minute and then wait for the market structure shift on the 15-minute in that area. And then if it has that strong displacement with a fair value gap, then you can enter on that fair value gap, and then you can ride it towards this level here that we just discussed. That's what I'm kind of seeing for Bitcoin. Little push up and then dump it down into the sell side liquidity. Alright, so that's kind of my Bitcoin analysis in a nutshell. I was looking at baby Doge, but it looks like they already dumped it right into the this low right here. So let's have a look at the lower term time frame. So one thing that we can do is you can put an alert. So for crypto, I want to see that this market structure shift on the 15 minute. Like I said, it has a lot less liquidity than the Nasdaq. So if you go down to the 5 minute and the 2 minute, the candles does not always look very nice. You see it's very choppy. So we want to see this market structure shift above this high. Then that would confirm that this is kind of just a liquidity rate of the stops below these lows. So if we get a push up above these highs, and if this push creates that fair value gap in a discount, then you can enter in that area. And then you can ride it towards this high, which will be more or less about 16-17%. And then the next target will be that high right there. And that will give you a potential gain of 23%. Right, that's baby Doge. And then I was also looking at SNX earlier. This looks to be a bit of a better setup because it still has to move all the way down, so you can still kind of plan for this position sizes and all of that. So what we have right here is a low. So below the low is sell side liquidity, and you can see that it did not displace below this low. It just kind of tapped into it, knocked out any potential stop losses in this area, then started to move to the upside. Market structure shift with displacement. So there's your fair value gap. So if it can retrace into this area towards the Fibonacci 618 or that OTE, that will be your entry, and you can put your stop loss right below this low, or right at the low. So then that's more or less risking 5% to make a potential 18%. All right, I think that's my analysis for today. Thank you guys very much for tuning in. I will be back tomorrow, probably around the New York lunchtime. Then I'll do an analysis in preparation for the afternoon session, and then potentially also right before the London Open, so early in the morning. So thank you guys very much for tuning in today. And then I will see you guys in the next one.